Right now, there aren't a lot of factors to push the market up. And you're right, the stimulus talks falling apart. The market is disappointed that that didn't go through, but it's also looking beyond it. So we could see some upward movement again, I'm thinking, after the elections are more in place, or if there's some other catalyst to drive the market, which we haven't seen at this point. Right now, as we are in earnings season, earnings drive the markets as well. Right now, bad earnings are being punished by investors, good earnings are being rewarded by investors. So that's having an effect on the market, I would say more so than stimulus and election news per se. Another thing that could drive the markets up is more good news from the vaccine front, but I don't foresee that happening until Q1, Q2 2021. What we're seeing in Europe is a shutdown, especially in the United Kingdom. We're seeing a shutdown again of certain areas where the virus has reappeared, and an intensive hotspots throughout the European Union that are popping up. So we are aware of it. We are cognizant of what's going on, and it's one of those things we're going to monitor, and towards the end of the day, make sure that we are prepared either way. I think that what you're doing in terms of, when you're staying at home, there are certain products that you're purchasing. There are certain solutions in the computer areas that you're purchasing. But I think at this time, we also have to start realizing that there are other sectors starting to ramp up and make money as well, albeit at a slower pace. Retail is a very interesting play right now, and I'd say the big difference that's occurring, Amazon Prime Day was 2 days this week, just finished, and that is the signal, that's the start of the retail from now until Christmas. It's actually elongated or made longer this particular holiday season for retail, giving them more opportunities to have people not only invest in the companies, but make more money, come out of the black sooner if that's possible, and really depends on what products or solutions they're putting forth. But I see it as a positive for the retail sector. There's no safe haven if you want to go into retail other than the biggest names, like you said, like Amazon, like perhaps even a Macy's. But you go into this with your eyes open, knowing that anything is possible in this sector, but at the same time, because of the longer season, that you have a better chance to make more money, and thus as an investor, your company could be making more money and you're going to make more money. You said it, the banking sector is a very positive area to be in. They have shown their resilience in this uncertain time. Look at Goldman Sachs, JP Morgan. They came out with earnings that were almost double for Goldman Sachs, JP Morgan, more than 25% up. These are the type of companies you want to own, because if they can weather this type of storm, it's high quality, and it's a company. These are companies that should be part of core portfolio holdings. Other companies that we think have seen a resilience during this pandemic, aside from the tech companies, are Philip Morris and alcohol type companies, Diageo, where we're coming upon a time where their products are well in use, and we're going to see their stock prices start to elevate bit by bit, albeit not as fast as technology per se, but we should see a nice swing to the upside from now to second quarter 2021. We kind of expected that. When you have 35 states that are becoming hot again with the pandemic, and they're not per se talking about shutdowns, but definitely restrictions are in place. We're starting to see a spike here in the Northeast as well, albeit not as bad as what we had seen. The Sun Belt, Arizona, Florida, Texas, same thing there. But now Middle America, we're seeing more of the pandemic and its effect. So yes, that's going to affect unemployment. It's kind of like this start-stop, where we had seen a decline as economies, different states' economies were reopening and causing the levels of unemployment to decline. But now we're seeing that start to uptake, and until we see a leveling off of sorts, these areas and the markets will remain under pressure.